Alright guys, just going to summarize the speech that we heard by Mark Carney. So he reiterated that there's little that the Bank of England will be able to do to address the economy in the case a disorderly Brexit delivers a fairly large blow to the supply side of the economy. He said that an abrupt Brexit, while not the most likely scenario, would probably deal a significant hit to the supply side of the economy. If this scenario comes to fruition, he warned, there is little that monetary policy can do. Okay, it would affect the demand for UK goods, he said. And those effects would be more negative the more disruption there was between the terms of the current relationship and the post-Brexit arrangements, he said. Alright, so he went on to say that shifts in production will be neither seamless nor costless, quite obvious, and with the risk of a hit to supply, if there was a disruptive Brexit, more rapid than advanced economies were accustomed to handling. Okay. Regarding inflation, it would mean that the Bank of England extended the horizon for inflation to return to its target rate of 2%, and with the bank potentially holding off interest rate rises to avoid imposing further shocks to a fragile UK economy post-Brexit. Alright, he went on then to point out that households remain resilient to a Brexit that has not happened. Okay, business investment had, however, struggled amid the uncertainty of the UK's split with the EU due to take place next March. Okay, speaking on the current state of the economy, Mark Carney pointed to the robust labour market as a sign of strength. He noted that employment and job vacancies are at record highs while the jobless rate is near historic lows. Okay, sterling remained near its highs of the days during Mr. Carney's press conference, which followed a decision by the Bank of England to hold interest rates steady. Okay, guys, as was widely expected. The central bank additionally said that in the case of an orderly Brexit, it would need to raise rates eventually to 1.5%, double the current level. Alright, guys. And let's quickly, while I got you on here, just go over some more fundamentals that and headlines that potentially would be affecting our markets today. Alright, we have the Czech central bank raises rates amid inflationary pressures. Okay, so that is coming out of the Czech Republic. And we also had a little bit of political tension today between Russia and Ukraine. Okay, Russia imposed sanctions on Ukrainian companies, politicians, and several businessmen. This was largely in response to sanctions that were imposed on Russia by Ukraine. So we have a bit of tension there. There's still a bit of a war going on between those two. Lots of tension at the border. So yeah, guys. That's pretty much it right now. Equity market wise, I'm just watching today. We made a good run yesterday on an S&P trade that I did, but I am not in the market today on equities. There's a lot going on foreign exchange, as you guys all know, so I'm focusing on that today mainly. I will be keeping you updated with fundamentals and headlines as the day goes on. Hope you're all having a good day.